Hello. Hi, everyone. Okay. I think people would still be joining in from the waiting room. Okay, I see people starting to join in. Hello, hello. Okay. So welcome everyone to Gojo's webinar. And yeah, I think people would still join in throughout the course of the webinar itself. But since it's already 6 p.m. here, Japan time, I'd like to start the event. Okay, thank you again for joining us today and participating in this webinar. Allow me to introduce myself. My name is Rania. I am a corporate planning officer here in Gojo. And today I am joined here by my amazing colleagues, Ignacio, Arya, and Mercy. Say hi, everyone. Hello.
Hello.
And yeah, so as you can see from the title of the webinar, we are going to introduce our impact report, which is one of our grand projects every year. As you know, Gojo is a small team, but we have a lot of insights that we want to share. We've got a lot of things to say. And because of that, we put a lot of effort into our impact reports each year. So we're super grateful to those who have read and or maybe planning to read the impact report after this. And also towards the end of this webinar, we will have an exciting announcement related to the financial diary. So please stay tuned. Great. So let me run you through today's agenda. First of all, we'll hear some opening remarks from Ignacio, who is our outside director and chairman of the Impact Committee. And some of you here must already be familiar with him, as Ignacio is an expert in financial inclusion and digital finance, having founded the Digital Frontiers Institute. And then I will also follow that up with an introduction to Gojo and the Gojo Group. And Arya, who is from our SPM and Impact team, will explain more about the two main themes of the Impact Report. And then Mercy will follow that up with the announcement about the Financial Diaries project, and then we'll wrap up the webinar with a Q&A session. So everyone, maybe you can see in the bottom of your screen, there is a Q&A button. So if you have any questions, comments, or feedbacks, please feel free to use the Zoom Q&A function, and then we'll try to cover them at the end of the webinar. With that being said, let me officially start the agenda. Ignacio, the stage is yours.
Thanks, Rania. It's a pleasure to be addressing all of you. Thank you so much for joining us. We're very pleased with the audience. Let me first acknowledge that today marks the culmination of a long, arduous process in which the Gojo SPM team, who are on this call, everybody except me, has dedicated much thought and effort with the publication of this annual report. So congratulations and many thanks to them for taking us to this point. Let me also stress the importance of the impact report within Gojo's governance framework. We are a fund essentially that has two functions. First, pick investments to make, and then put proper governance around them. So it's in both those functions that we need to be very clear about our impact objectives, model, and so on, so we can pick the right investments, and also so that through our governance function, we can keep them in track with the objectives that we set in mind when we made the investment. So the impact analysis and the impact report is central to maintain our mission alive and on track for an operation that is indirect impact to customers. Beyond giving a general update on our impact objectives, metrics, and performance, each year we do a deeper dive to clarify our own thinking and positions on key issues. Last year, it was about income segmentation of our clients. How poor, how rural are they? This year, we've chosen two topics. What is financial inclusion, and why we focus on that as Gojo, and how to assess and deal with generalized over-indebtedness situations among our clients, which can occur in some markets. So let me just briefly motivate both. After 10 years of existence, it might seem appropriate for this year to question again, what is financial inclusion? Why is it that we're devoted to this mission? So that's what we thought this year was appropriate, the 10-year anniversary year. But mostly, it's a question we need to keep asking, because the impact of financial services in people's lives are very diverse, very broad, and very indirect. It's very hard to measure, or it's very hard to reduce impact to only a few metrics. Is there more income, more consumption, more happiness, more education for the kids? Which of these is right? It's always going to be a combination. And it's even harder to establish clear causality between the use of the services and those changes in people's lives. So that increase in consumption or income or education of the kids, to what extent was it because of the loan or the savings that we enabled? So we need to be constantly reasserting the many indirect ways in which we seek to improve people's life choices. In terms of the second topic, the over-indebtedness, it's kind of the flip side of the impact discussion that precedes. Because we need to be very vigilant about when can we cause negative impact. So the risk of contributing to over-indebtedness situations is inherent in the provision of credit. So it is our duty to be vigilant to detect early such situations and to know how to deal with them in a just and effective way. We know that many in Cambodia today are experiencing over-indebtedness, and there is some talk about that in India too. We have presence in both countries, so we want to be particularly sensitive to how our partners in those countries assess over-indebtedness and how they adjust practices in that context. I know these will be fruitful topics for discussion today. We will present our findings and our views on these issues, and we hope that we can maintain an ongoing discussion on these topics today and into the future. So on with the substance of the discussion. Let's keep it to a two-way exchange of ideas. So please do be thinking about the questions and comments that you want to formulate to us. So with that, back to the team.
Thanks, Ignacio. So before we get into the highlights from the impact report itself, I'd like to quickly introduce Gojo and the Gojo Group. Gojo & Company was founded in 2014 with the vision of creating a world where everyone can determine their own future. And yeah, as Ignacio mentioned, we recently celebrated our 10th year anniversary. Actually, back in July, we held a shareholders event where we walked through Gojo's history. And then we also held an offsite right outside of Tokyo. And we celebrated with members and also our group companies. Gojo's mission is to extend financial inclusion across the globe, and ultimately our long-term goal is to provide high-quality, affordable financial services in 50 countries. And in terms of how we work, so Gojo's business model is essentially to raise funds from like-minded, impact-oriented investors, and then channel these funds into new and also current group companies who are aligned with our mission. And these group companies would be financial service providers who serve low to medium income people in developing countries. And then we aim to eventually take majority stake in these companies. And at the same time, we also support our group companies to scale up and improve their products and services by a range of management support, from negotiating debt funding to also using data to learn about clients' outcomes and experiences. And as of March 2024, we have 6 consolidated group companies in 5 countries: in India, Tajikistan, Myanmar, Cambodia, and Sri Lanka. Okay, great. So let's move on to the main topic of today, which is our impact report. Before we go into the, what is financial inclusion and over-indebtedness, I would like to explain 6 highlights from this year's report. So the first one is that our client base has grew. As of March this year, Gojo had 2.4 million clients, of which 2.2 million are lending clients, and over 260,000 are savings clients. And out of this 260,000, 71% had voluntary savings accounts. And almost all of our clients are female, and 4 out of 5 of them live in rural areas. This is to be expected because, we've historically had high proportions of female and rural clients because of our group companies' focus on typically underserved populations. The other highlight is the fact that we conducted SPI audits for our group company MyFida in Myanmar and Humo in Tajikistan. And this is the first time that either organization had undertaken an SPI audit. And I'm sure that a lot of you here are already familiar with the SPI audit, but for those who aren't, the SPI audit is an audit to evaluate the social performance management practices of financial service providers. And when we dive into the results itself, although MyFida underperformed compared to the global and regional benchmarks, The audit found that despite the challenges from COVID and also the ongoing coup in Myanmar, there is a strong ethical culture and also adherence to the client protection standards amongst the loan officers in MyVida, and that the loan officers display deep sympathy and also respect for clients who are struggling to repay. And then in Humo's audit, which was done by Arya, one of our qualified SBI auditors here in Gojo, we found that they displayed excellent performance in Dimension 6, which is responsible growth and returns. And then we also found that they had a very well-detailed collections policy that places great emphasis on respectful treatment of clients. And this is very relevant in the context of our discussion today about over-indebtedness. The next highlight is our Pasio program, which is a digital finance initiative that we launched in partnership with Silatech, a Qatar-based social development nonprofit. Essentially, the Pasio program offers young entrepreneurs aged from 18 to 35 years old, who are also our clients of our group companies in Cambodia, Sri Lanka, and India. And we offer them income-generating loans and a digital platform. So if you see here on the left part of the slide, it's the Pasio app. And through this app, the clients can access easy loan management, and they can also access educational content on financial literacy and also business skills. And on top of that, they can access a community platform in which they can interact with other entrepreneurs. And in this year, we also established Unleash Capital Partners, which is Gojo's venture capital fund focused on early stage fintech startups in India. And as of December 2023, Unleash has raised $30 million from various investors in Japan, with the anchor investors being Gojo and SMBC. And so far, Unleash has made 2 investments, one in Acart, which is a fintech startup supporting farmers, FPOs, and MSMEs across the agriculture value chain. And then another investment in CredRight, which is a tech-enabled MSME lender. Another highlight is related to the member diversity at the holding company level of Gojo. So the percentage of women members in Gojo has increased significantly from 31% last year to 44% as of March 2024. And this is because over the past year, we've made significant efforts in diversity-oriented hiring, and this resulted in a more balanced gender ratio amongst our members. However, it is to note that in the executive committee, which comprises of 8 members, this committee remains predominantly male, with only 1 woman serving in the group. And obviously, this raises some concerns around gender imbalance amongst the senior management, but we are working hard to remedy this. And lastly, we've expanded the scope of our GHG emissions calculation. So for those who have read the impact report from last year, or maybe attended the webinar from last year, you might know that last year we only reported our holding company emissions, but this year we have included several other Gojo Group companies into the calculation, and we hope to expand the scope next year. Okay, I think I already covered all 6 highlights. Then let's move to the first main theme. Arya, go ahead.
Thank you. Thanks, Rania. So the first main theme of our impact report is, what is financial inclusion? So microfinance was first created to provide vulnerable people, such as low-income people in rural areas, with access to financial services. Over time, though, this issue of access has become less prevalent. In this graph on screen, you can see that across Gojo's countries of operation, the number of people who have an account with a bank, mobile money provider, or any other financial institution has increased. So now the number of people who are financially excluded is smaller than ever. And as access to financial services have increased, the quality and affordability of these services have come to matter just as much. This shift can be seen in our long-term goal as well, which is enabling high-quality, affordable financial services in 50 countries. Improving the quality and affordability of our services is understandably an ongoing process. And the way we get feedback from our clients is through our internal surveys. We use 2 main surveys. One is the satisfaction survey, which is done for our current clients. And the other is the exit survey that's done for clients who have already finished paying off their loans, but have not renewed in the next 3 months. The satisfaction survey has been implemented for a few years now, and in the last year, 4 of our companies conducted these surveys. The average score, as you can probably see on the screen, is 95%, with clients liking the ease of applying for a loan and the speed of disbursement. They also shared some feedback to improve in the sense that they preferred lower interest rates and fees, as well as wanted higher loan amounts. We last year also developed an exit survey template and best practice guidelines that was piloted by Maxima, our group company in Cambodia. The survey mainly aims to understand the reasons behind a client's exit and also get feedback from them so that we can improve. What we found is that majority of Maxima's client exits was because clients already had enough money and did not need another loan, while 4% of the exits were due to clients being dissatisfied with Maxima's services. To address this, the operations team at Maxima intends to conduct a market survey to understand clients' needs and wants a little better. Moving on, in this impact report, as you probably have seen or will see, we showcase not only the positive side of microfinance, we also wanted to shed light on the downside of microcredit, one of which is over-indebtedness. As Ignacio spoke a little before, the risk of contributing to over-indebtedness is inherent in the provision of credit. So let's understand over-indebtedness a little better. What is it? It is this condition where one's debt obligations exceed one's capacity to repay them. Now, many MFIs and banks, including Gojo's group companies, have an array of routine processes and internal controls based on a very solid credit policy to ensure that clients do not borrow beyond their capacity to repay, and that loan officers are not aggressively selling loans that clients do not need. No responsible lender willingly enters into a lending agreement where the borrower's repayment capacity is less than their debt obligations. Yet, despite rigorous checks, reality is different. Clients often become unable to repay these loans from time to time. And we'll see that through an example of a woman in Cambodia. So a woman in Cambodia used to run a successful grocery stall and sewing business. She used to be, bringing in money to support her family of 4. And her husband also supported by working as a driver. She took out a $3,000 loan from Maxima to improve their home and buy a vehicle for her husband's business. But soon after she paid off this loan, she fell ill. Her husband also lost his job due to the economic downturn. So she took an additional $1,500 loan from Maxima to support her needs. But that was not enough, and she had to take one more $1,500 group loan from another MFI. Naturally, she struggled to repay both of them. And because of increasing debt, she couldn't afford to send both her kids to school, and eventually her daughter had to drop out. As you can see, over-indebtedness can be caused by many things. As in this example, there are always risks of emergencies coming up. It can be an illness in the family, especially affecting the main income earner, an economic crisis resulting in a loss of income, a pandemic, natural disasters, and these days we see, heat waves. So all of these things can't be assessed and factored into the loan assessment process. Secondly, the borrower's income itself is very volatile. Due to the, its fundamentally informal nature, it's difficult to accurately calculate their incomes. And moreover, it keeps fluctuating over time. So even with a stringent loan assessment process today, it's challenging to predict whether their repayment capacity will be the same in the long run. And finally, even if there are no issues at the time of the loan assessment, if a borrower decides to take additional loans after disbursement, especially from irresponsible lenders, there's not much that we can do to stop them from being over-indebted. The client's lack of financial literacy can also add to this issue. So when a client does become over-indebted, they feel pressured to repay their loans and often make very tough sacrifices to make ends meet. This could be increasing their workload, working extra hours, working when they're not feeling well, tapping into other sources of funds like their savings or selling assets, like their livestock or land. They could also try to reduce expenses by cutting down on food, either the number of meals or quality of meals, or even pulling children out of school, as we saw in the example. So how do we monitor, prevent, and respond to over-indebtedness? Actually, monitoring over-indebtedness is challenging. Financial service providers usually look at an indicator called PAR, or portfolio at risk, to monitor debt stress amongst clients. It's a measure of the value of loan portfolio that's overdue by a certain number of days, represented as a percentage of the total portfolio. It's usually divided into brackets such as PAR 1, meaning more than 1 day overdue, PAR 30, meaning more than 30 days overdue, and so on. But the downside of PAR is that it only reflects after a loan repayment has been missed, meaning it identifies debt stress, but after it has already occurred in all probability. So by the time PAR rises, the client is already facing some of these challenges. So in Gojo Group, what we try to focus on a little more are preventive and responsive measures at the moment. One of the preventive measures that most lenders use is a thorough loan assessment process. An example of this is, our group company in MyFida in Myanmar. They adopt a very comprehensive assessment process before a loan is disbursed. They conduct a very thorough cash flow analysis by identifying the income pattern of this potential client and their household members. They also look at the business revenues and expenses for the past 3 to 12 months. They also check with the credit bureau and see how many other loans the client has. Various documents are also collected from the client and their household members, such as business license, house ownership documents, and so on. To further verify the client's eligibility, loan officers also visit in person. Loan decisions are not just made based on guarantees or these clients' past repayment behavior, but each time they submit a new loan application, a fresh repayment capacity analysis is conducted. All of these steps help MyFida in reviewing the client's ability to repay the loan at the time of each application. Another way that at Gojo Group we prevent over-indebtedness is by requiring our group companies to obtain and maintain client protection certifications. These are usually conducted by external ratings agencies and are based on the 8 client protection standards, an internationally recognized framework managed by the nonprofit Cities Plus SPTF that sets out a series of guidelines for the delivery of financial services to microfinance clients. One of these 8 standards is the prevention of over-indebtedness, and it includes best practices such as monitoring loan officers as incentives to prevent aggressive sales, or setting PAR thresholds that, when triggered, require additional monitoring. As of March 2024, 4 of our group companies have gotten certified, all of them receiving at least the silver level of certification. And by obtaining these, our group companies continue to demonstrate their commitment to responsible lending. Now, once clients are over-indebted, it's quite unpleasant for both the client and the lender. The client needs to think of ways to repay money while meeting their needs, while the lender needs to be mindful of recollecting the debt without pushing them into making tough sacrifices. So following up and collecting repayments from over-indebted clients requires a very good understanding of their situations and choosing appropriate collections practices. At Gojo's group companies, collection strategies vary depending on how late the payment is and also on the client's ability and willingness to repay. In the early days of a missed payment, the call centers in these companies will contact the clients to remind them about the due date, and loan officers will often visit them to check on them. When the payment continues to be late, higher ranking employees such as the branch manager and the regional manager will start visiting the clients. But when the payment is more than a month late and it starts to become clear that this process of recovery is not going to be straightforward, the key strategy employed by these group companies is to maintain consistent contact and a good relationship with the client by visiting regularly, but politely reminding them of their overdue balance. A common tactic that helps loan officers strike this balance between holding clients accountable for payment, but also accommodating for their financial struggles is to ask for a promise date as of when they will be able to repay. And then the loan officer visits the client again on this agreed date. For clients facing genuine medium to long-term difficulties, such as serious health issues or major crop failures, companies offer solutions such as restructuring or rescheduling loans on a case-by-case basis, of course, following internal policies and regulatory guidelines. Where clients are able to repay but unwilling to repay, group companies try to apply firmer pressure by warning them off or initiating legal proceedings past a certain number of days overdue. However, this process of settling a legal claim in court can be long and quite expensive compared to the actual amount overdue itself. So it is quite rare for lenders to get into litigation with clients. So now if we go back to our previous example of the woman who was a Maxima client, she was in a very difficult situation. She, was met with illness, lost her income, had to pull out kids from school, was struggling to repay. And the staff at Maxima tried to work with her to reschedule the second loan that she had of $1,500, while the staff kept sending reminders twice a month, conducted occasional visits to check up on her. They were also very careful of how they came across to her. They tried to be supportive and empathetic to her rather than just collecting back the debt. So in general, it's difficult to completely prevent over-indebtedness. Nevertheless, we believe that our role as a responsible impact investor is to carefully observe market trends, do our best to prevent it from occurring at all, and take appropriate measures if it does occur, thereby minimizing the negative impact we have on our clients as much as possible. Now, when it comes to dealing with issues such as over-indebtedness or in general, deepening our understanding of financial inclusion, one of the things that helps us a lot is learning more about clients or low-income people in general. How do they live? How do they use money? And so on. Gojo's Financial Diaries projects help us do exactly that. So let me invite Mercy, our researcher in residence, to take it from here and talk us through Financial Diaries projects. Over to you, Mercy.
Yeah, thank you. Thanks, Arya. So first of all, once again, greetings to everyone who has joined the webinar from different time zones. So I'm Mercyline Manoj, working as a researcher with the Financial Diary projects here. And I also assist the social and performance management team here at Gojo. So all this while, you had been listening about the clients and the measures undertaken to provide quality and affordable service to clients through audit, client protection standards, digital apps, etc. So along the same lines, Financial Diaries is one of the ways that enables us to have a closer look at the lives of people. So this is a research methodology in which we collect daily household transactions and we study them for insights. And we share these insights with the SPM team as needed. And these insights are helpful to enhance our understanding on the outcomes, the indicators for the outcomes as such. And it also works towards our impact framework. So far we have had 2 projects, one in Cambodia and one in Sri Lanka. We just recently wrapped up Sri Lanka's data collection earlier this year. We are in the process of analysis and summarization right now. We also collaborate with Para Financial Diaries led by Mr. Stuart Rutherford. Many of you may know he's one of the pioneers in this field. So working in all these projects had been a learning and a refining experience for us. And I would say that we are a work in progress. Yeah, to move on, we'll be having a webinar on Cambodia Financial Diaries in 2 months' time on November the 12th. And we'll be exploring key insights from the Cambodia diaries. Today, I will touch upon very few highlights from the Cambodia report. Can we move on? Yeah. So the preparations for the Cambodia research started in 2020 during the Corona period, and the household data collection commenced later 2021. It almost went on for a year. The methodology that was followed was to record in detail the household transactions, like how much they earned, where did the income come from, how much was spent, what were their major investments, big purchases, money borrowed, money saved, and so on a daily basis. And this was achieved by the local enumerators recording the transactions, either by visiting a couple of times a week or by telephonic conversation. And as you see, this was a very detailed and a frequent data exchange. There was a certain level of rapport and trust that was required between the diarist and the enumerator. And we started with around 149 households. Yet on an average, we had 128 households during the research period. The reason being Some households moved out of the locality and some just gave up because of the difficulty in remembering and recording detailed daily transactions. So there were few replacements along the way. Whenever dropouts occurred, we found a new diarist, we recruited new diarists. And as for the research area, it was across 5 provinces in Cambodia. And as a result, we had a total number of transactions that was over 220,000 records. And these were labeled into 141 categories like grocery, medical, education, utility, fuel, to name a few. So needless to say, accounting for each household every day was inevitably a time-consuming process. And there is a cost incurred because there were people, resources, and time involved. So this research in Cambodia was made possible by a JICA sponsorship. Can we move on? Yeah, so now here this is just to give a glimpse, and what you see here is the actual data tabulated with the frequency and the size. And I'll touch upon very few aspects in this. We divided all the items into 4 major categories: the income and the expenditure, which you see on the left. And we separated the financial transactions as financial inflows and financial outflows, which you see on the right. So the reason for the separation is that these financial transactions had or have opposite transactions at different times. For example, a loan taken, there is a future outflow, so it needs to be paid back. And we also classified asset transactions similarly. For example, gold jewelry, if you take, we observe transactions of small gold items being purchased and sold. Similarly, gold pawned and recovered for various purposes. So thus, one of the motivations for the research was to get closer to the ground reality. And there are a number of interesting observations. Even if you look at this table, it is very insightful to compare the loans and the loan repayments with the income and expenditure. And of course, I would say that there are some transactions that are ambiguous. For example, money exchanges with family members and relatives, we found it difficult to separate because it wasn't clear whether it needs to be paid back or not. Is it a borrowed money or a cash gift? So there were many challenges as we worked through the data and with the diarists. So can we move on? So if you look at this data visual, this data visual captures the list of all the loans recorded during the research period in the order of the size. And it's divided into 3 main categories. These are loan from financial institutions, money borrowed from family members and relatives, and then money borrowed from individuals. So when I say individuals, it means friends, neighbors, private money lenders, co-workers in your workplace, acquaintances, any individuals. And in this data visual, the vertical axis is a logarithmic axis. Otherwise, if you take a normal axis, only the institutional loans are visible due to the size. So when we think of financial inclusion, the observation from Cambodia Diaries is that these institutional loans are less frequent, but much larger in size, running up to $10,000 when compared to the informal loans, which are more frequent, but the size ranged only from $10 to a few $100s. And this is one of the advantages of financial diaries, like where you get to know how many formal and informal loans a household had taken and what is the size, how do they repay, and how it impacts their livelihood and so on. So we get to have a more reliable data over a period of time. And can we move? Yeah. So this is one of the example from the diaries. In this data visual, the x-axis is the timeline by weeks, and the y-axis is the inflow and the outflow. This household took a MFI loan for $1,250, and it was used for home construction, which you can see in the red. If you look at the visual, on the very same week, there is a big outflow of similar size, which is used for the material purchase for the home construction. And if you look to your right, there are other big outflows in the following weeks. And we also see in the inflows, there are big money that has come in through remittances as well. So to make it short, I would say the building construction was achieved over a couple of months in phases. But it was accomplished not only with the loan from the institution, but in combination with other incomes like remittances. The household sold some of their livestock to achieve this. So when we think of financial inclusion, Financial Diaries research provides a better visibility on the outcome and what are the factors involved in the outcome. And we will be soon having a webinar, and we'll be looking at the Cambodia Financial Diaries insights in detail. Yeah, we can move on. So this is another announcement from our side. Gojo has launched a new webpage focused on the financial diary projects. And this is a new milestone in Gojo's research. To start with, can we go a little ahead? We cover some basic details and we cover some stats about the project. And here we talk about, in a very concise way, some of the diarists. You can see all these diarists have used, have accessed the financial services and how it has impacted their lives. We have given it in a very short note. So there is one individual called Kannan. The name has been changed and we have taken consent from them. He has used a financial service for his fishing nets and for his boat repair. And we cover some of the details about that. And we also have put short pictures of the diarist notebooks, how they make an entry in that. You can have a look at it. Moving on, we see some data visuals here. It's the snapshots from the diaries. It is quite informative. If you click it, you will have the details. And we regularly aim to provide more reports, and you can see some existing reports. Gojo also jointly published a Cambodia Diarist report alongside JICA. And if you're interested, we invite you to read. So all those details are provided in this website as well. Yeah. So thank you. That's all from my side.
Thanks, Mercy. Thank you, everyone. Okay, so we're quite ahead of time, which is great. Let's see if we have any questions in the Q&A. Okay, so I believe that we don't have any questions at the moment, but maybe we can raise one of the questions that were asked in the Japanese webinar that we held on Tuesday. One person asked about how does Gojo how do we determine the impact measurement indicators? So maybe Arya, would you like to cover that?
Yeah. So at the start of the webinar, Ignacio kindly, gave us a background that, the topic of impact is so broad, can often be vague, very confusing and challenging to shortlist an accurate set of indicators. So for a while, in 2020, we actually developed the client-centric framework, which was our initial thinking about clients and all of that. We defined some indicators of which we were measuring maybe 4 of them through our surveys. That was mostly around, for example, resilience, right? How do clients cope with emergencies? What kind of sources and options do they have in terms of acquiring money that's required to cope with an emergency and so on? But since then, we've learned a lot more about our clients, and we've started updating our impact measurement framework. You will hopefully hear more about it in the next impact report or a webinar such as this. So the way we are thinking about it is more in terms of short and medium term changes that clients experience that are more tangible, more actionable, that we can actually use in terms of improving our products and services as well. So more in terms of outcomes and outputs around the themes of access, utility or usability, and quality that we just spoke about in terms of affordability or convenience, flexibility of services, and so on. So yeah, stay tuned. Hopefully we'll put out something for you soon.
Great. Thanks, Arya. So we've got another question here in the Q&A. So let me read it out. Often, debt recovery is outsourced to third-party recovery agents who typically deploy unfair recovery practices. Are there any measures in place to prevent that? Okay. Arya, do you want to cover this again, or?
Yeah, I can take a stab at it, and then Ignacio, if you want to add, please jump in. So I think usually one of the things is, looking at whether this third-party agency is regulated or not. So that, I think, offsets some of the risks then and there. The other thing is, in our SPI audits and client protection certifications, there's also, I think, a new segment on partnerships that's going to come up as part of the digital financial indicators as well, where we look at all of these partnership agreements and whether these partners understand client protection standards and so on, if that's already been in place through a contract, and if it's actually enforced in the field as well. So I think gradually partners are also coming into the scope of our social performance audits, and that'll be one of the ways we monitor going forward as well.
Ignacio, any thoughts? Oh, I think you're muted. So sorry.
Sorry. Yeah, no, nothing to add to that. It's something that we need to be vigilant. Obviously, third parties are the direct responsibility of our partners. So any third party that they use, we have to feel comfortable just like we would with their own practices.
Thanks, Ignacio. Thanks, Arya. Okay, then we have another question. In the case of over-indebtedness, how do you assess that your client is sincerely unable to repay and that you will offer a restructuring? And how sustainable for the institution is the option of restructuring? Ignacio, do you want to try answering this question?
Sorry, can you repeat the question?
Okay.
I didn't hear it well.
In the case of over-indebtedness, how do you assess that your client is sincerely unable to repay and that you will offer a restructuring? And how sustainable for the institution is the option of restructuring?
Yes, no, absolutely. This is why microfinance always relies, or good microfinance practice always relies on close customer relationships with the field officers. So there's a deeper understanding of the situation of the clients, enabled by ongoing communications, via visits to the client, and so on. So yes, you have to be comfortable that the situation is real. Microfinance is supposed to be geared towards that, unlike, for example, purely digital credit, where it's just a statistical game that you're playing. In the case of microfinance, it's microcredit. It's not. It's a relationship game that you're playing. So it's essential to maintain that, and the more signs there are of widespread over-indebtedness, the more proactive you have to be in reaching out to clients and understanding their situations. If the situation is genuine, then absolutely you have to restructure. I think here the guidance has to come from how informal credit works. Informal credit generally is very accommodating of the true circumstances of the customers, because they're very local operations as well. So we just need to be able to offer that sort of flexibility to our clients when they really genuinely need them. It's in the interest of both the client and of the microcredit organization for the client to succeed ultimately. So it's a win-win to show that flexibility.
Thanks, Ignacio. Okay. Let me also add another question that was raised in the webinar, in the Japanese webinar. So one person was asking, so what is the strategic difference between, Gojo's Holdco main strategy, which is acquiring microfinance institutions, and Unleash, which is investing into fintech startups? So allow me to explain. As we all know, Gojo's ultimate goal is to extend financial inclusion, and up until recently, we've been doing that by acquiring majority stake in MFIs worldwide and also providing active management support for them. But we also recognize, and I'm sure everyone here also recognizes, that microfinance is not the only means towards financial inclusion, which is why we established Unleash as a complementary strategy to our main strategy. And they, as I mentioned before, they focus on fintech startups. So while the target companies are different between Gojo Holding Company and Unleash, the vision remains the same. And governance-wise, if you read through our impact report, maybe you already know this, but we deputed one of our executive committee members to be a co-general partner at Unleash. And then Taejun also serves as, Taejun Shin, our CEO, also serves as part of the investment committee at Unleash. Okay. A comment related to the financial diaries. As I was going through the different items of expenses in financial diaries, it should be interesting to see later if financial inclusion has truly impacted their understanding of health and hygiene. And if so, whether medical expenses has gone down by improving overall health. Thank you. Okay, maybe Mercy, do you want to comment on this? Maybe perhaps like future plans for the financial diaries related to health and hygiene?
Yeah. So in though our financial diaries focuses on household cash flows and money management, but we see it in an overall way. What are the different impacts that makes in their livelihood? The areas that we cover is medical, education, general livelihood, utilities, all these areas that we cover. We are yet to see whether the medical expenses have gone down or not. But what we see is the improvement in the sanitation and hygiene. So when we think of financial inclusion, we see people taking loans specifically for building of toilets, building kitchens, open kitchens becoming a sheltered kitchen, bringing in roofs for their house, a thatched roof, changing into a cemented roof. People living in mud floor, changing into a tiled floor. These are the observations we see by using financial inclusion, what difference they make in their lives. And it is, and I believe that this is the true impact, and it is achieved over phases. And we see that it is not it is in combination with other incomes as well. Thank you for the question.
Thank you, Mercy. Okay. So let me also, again, there was this interesting question that was asked in the Japanese webinar about how much operational resources does Gojo allocate for impact measurement and SPM? So for this question, there is no straightforward answer. To answer simply, well, our SPM impact team is made up of around 5 to 7 people if we include full-time members, seconded members, and also part-time members. However, it's also important to note that, impact measurement and SPM is in the heart of the work of all departments. And as part of the recruitment to become a Gojo member, commitment to impact work is part of how one gets evaluated during the recruitment process. And also everyone receives regular training on the USS EPM. Fun fact, actually, recently we held we hold an SPM training twice a year, and we recently held one for all the members on aggressive sales, where we did this little like role play about a loan officer, doing aggressive sales towards a client, and we also covered what each department can do to respond to this. And another example of how impact work is embedded into all departments is, for example, in the internal audit team, our head of internal audit, Rajneesh, he is working towards his qualification as an SPI auditor, and also all of the internal audit team, they're trained on the USS EPM, and they actively look out for red flags related to SPM practices during their audits. Okay, and then we have another question. What do you think about PPI? Is it a practical tool to measure impact? Okay, so I think this can be answered by either Arya or Ignacio. I'll leave the two of you to choose.
Arya, please go ahead.
Yeah, I'll take a stab at this. So a couple of years ago, a few of our group companies tried using PPI, and we did some analysis of the data that we gathered, and couldn't really tell in great detail whether their lives have improved, progress out of poverty or not. Kind of was 50-50 in terms of results. So when it comes to of course, as a tool, it's interesting. If we have endless resources and time, I'm sure I'd be more curious to try it out. But given that there are these constraints and we have to be more choosy, I'm more biased towards, slightly more actionable, practical, tangible indicators, which can help us improve our daily operations of products and services. So yeah, it probably is an interesting tool. Our experience with it has been neither too great nor too bad. Quite undecided about it. We still debate whether we want to continue it. So yeah, we'll see if we end up doing that or not.
Thanks, Arya. Okay. Another question. Are you also implementing or considering impact measurement and utilization for Unleash? If so, what would it look like? Okay, thank you for your question. Let me try to answer this. So the team over at Unleash, they're actually working on their comprehensive impact strategy right now. From what I heard, they're basically doing this workshop to essentially flesh out their impact strategy. And I believe that this impact measurement would closely mirror what Gojo Holdco is currently doing. And of course, we'll closely monitor their impact measurement and SPM practices as well. Thank you. Okay. So while we wait for another question, actually another question just came in. So let me raise this. Okay. Yeah, it's not a question, it's a comment. So PPI was initially developed by the Grameen Foundation and it was last updated in 2016 and has also become redundant now. So yeah, great, thank you.
Thanks, Tanvi.
Okay, I'd like to ask this question to Ignacio. This was a really interesting question that was raised in the Japanese webinar. Let me read it out for you. So, to move from financial inclusion to financial equity, it's important not only to provide financial services, but also to provide support that enables people to earn money on their own. Is this type of support increasing around the world, especially with the expansion of the usage of technology? Ignacio, as a digital finance expert, do you have any thoughts around this? What do you think?
Well, I think the question is very good. Ultimately, what people want is more income, not just quantity, but more stability of income. So it's really three things around income, which I broadly call myself. It's my term, income shaping. People want to shape their income. It's first quantity, second is reliability of it, and the third is when it comes in, the timing of it, because you have some daily expenses. So it'd be nice to have some daily income to cover that, some monthly expenses. So nice to have some monthly income coming in as well, and so on. So the ability to shape your income to meet the needs and the commitments you've made to yourself and your family in terms of certain expenditure levels, income is fundamental. Microfinance tries to deal with that by providing financial services that support you in that enterprise rather than direct income support. That's of course the main exception is of course all the graduation programs where credit is not the right entry into this path of shaping your income, and so there's much more direct provision of inputs so that you can start a business. So I think in general, yes, we would like to move in that more in that direction, but it's actually much harder to implement because the abilities, the needs, the locations are so diverse that it's very difficult to come up with standard ways. And the reference to technology, I'm not sure I understand how technology can help. I think the more removed you are from the client, the less ability you have to do that sort of target intervention. So I'm not sure I understand the connection with technology, how that would make it easier.
Thank you, Ignacio. Okay, so since we have no more questions coming in, let me close the webinar today. Thank you again, everyone, for joining us. Once you exit this webinar, you will be automatically redirected to a survey. So we have Now, some plans for upcoming webinars. As we know, there's the Cambodia webinar coming up. And other than that, of course, we also have other insights to share. So we look forward to your feedback about the webinar today, and also perhaps some ideas of what other topics we can cover in future events. And furthermore, if you have any questions or comments, not just about the impact report itself, but anything related to Gojo's impact work and SPM work, please feel free to reach out to the PR team at pr@gojo.co. Okay, so I think that's it for today. Thank you, everyone. Again, we'll see you in the Cambodia webinar. Thank you.
Thank you.
Thanks, team. Bye-bye.